Welcome back to Alex Lavender's YouTube channel. I am, of course, your host, Mark, and I'm joined, as always, with Alex. And Alex is a certified mortgage broker, and he's here to answer the question, what are the three biggest mistakes that people are making with a mortgage refinance? So, Alex, how are you doing?
Hey, Mark, I'm doing great. Yourself?
Doing very good. So, Alex, let's get into mortgage refinancing. What are the really common mistakes that you see people, Canadians specifically, making when it comes to refinancing their mortgage?
For sure. I mean, one of the biggest mistakes is not having enough equity in homes. Over COVID and the last 5 years, we've seen a substantial increase in equity. So anyone who bought homes in 2020 or before, even maybe 2021, they have a substantial amount of equity. Anyone who's recently bought a home in maybe 2024, 2025, we're seeing that equity buildup is definitely a lot slower now. So to do a refinance, you have to have 80% of the equity in your home. 20% equity in your home. 80% is the largest mortgage that you could refinance. We call it a loan to value. So the highest loan to value could be 80% of the value of the home. So that's one of the big things for sure.
Okay, got it. So you need to have at least 20% equity. Who defines how much your home is worth? Is that going to the bank, to you, a mortgage broker? How do you know what that value is?
Yeah, it's a great question. So when we're doing a file, we go into it with an estimate of what we think it's worth based on homes in the area. But we would try to pass it through the automated valuation system first. If it passes through, then no appraisal is required. If it doesn't pass through, usually when the value is on the high side, then an appraisal is required, and that'll determine the value of the home. So once that comes back, it would be 80% of that value would be the maximum that you can refinance to.
Okay, got it. So if I want to refinance my house, then I just basically reach out to you, work with a mortgage broker, and you're going to take care of that appraisal process for me, right?
Yeah, exactly. And it may not even be required. So sometimes there's some tricks to try and get it to pass through this automated system, which is obviously the goal because it's cheaper and quicker. But if it doesn't pass through, then an appraisal would be required.
Got it. And does that cost money for me to get my home appraised when I'm doing a refinance?
Yeah, it does. And some promotions may cover this. Either some lenders may have a cash back promotion that offsets this. Some may have a closing promotion that'll cover this as well. But on a standard process, if there wasn't any promotion and no lender covering it, then you would have to pay that. And that's typically between $400 to maybe $1,000. Typically, it's going to be about $500 though. It just kind of depends. Maybe it's a more executive property or it's more rural. That will drive up the price as well.
Okay, got it. I think that's a big thing with mortgage brokers. That's a benefit that I don't think many people think about, which is you can go use yourself, reach out to Alex, and then be able to get multiple options from hey, it'll cost this much for an appraisal or this much. And so depending on what lender you want and what has a better appraisal rate, you can kind of go and choose basically if you work with a mortgage broker instead of going to the big banks. So that's number one, the biggest mistake that you see. What's number two?
Yeah, number two, that would probably be the penalties, I would say. So if you're midterm and you're looking to do a refinance, sometimes there can be substantial penalties and it just doesn't make sense. Sometimes these can be tens of thousands of dollars, depending on where you are. I mean, if you were the first year into a 5-year term, there's a chance that penalty could be substantially high. If it was a fixed rate mortgage. If it's a variable rate mortgage, it's always 3 months of interest. So those penalties tend to be a lot more reasonable. But fixed rate mortgages, it's an interest rate differential. It's kind of hard to calculate, but sometimes it can be substantial. So that's one of the biggest things is we always tell clients, check what your penalty is with your existing lender and just kind of see, if it makes sense. They'll come back with a figure and we'll look at that and see if that number is worth it or not, or maybe it's better to just wait.
Got it. So that seems like a pretty big and steep penalty. When would you recommend that someone looks at refinancing their mortgage? At the end of their term or upcoming to their term for their mortgage renewal? Is that the best time?
Well, the best time is when you're up for renewal because then there's no penalty at all. So if you can time it with your renewal date, you can submit a file 4 months before the renewal date so that you can get a rate set and get everything approved for that renewal date. But that's the best timeline when you'll have no penalty at all. Some lenders, if you refinance directly back through them, they may allow you to do this even before the maturity date. but it does limit your options because we can only go back through that lender.
Okay, got it. And I believe that these penalties do not need to be paid out of pocket, right? Can you roll this penalty in with your mortgage refinance into your next mortgage? Is that possible?
Yeah, it's a great question. So the penalties, legal costs, any other closing costs, they can all come out of the mortgage proceeds so that you don't have to pay it yourself. The only thing that you have to pay yourself is the appraisal.
Wow. That's such a huge benefit of using a mortgage broker. Yeah, that's awesome. That way you don't have to literally fork out tens of thousands of dollars to do a refinance. Okay. What is the third biggest mistake that you see when people are trying to refinance their mortgage?
Yeah, another big mistake is the closing costs. So some lenders will cover it, some won't. It depends on the mortgage, but let's just say, generally speaking, your main closing cost is going to be legal costs. Um, Unless you're refinancing back through the same lender and it's a unique scenario where it's like a collateral charge and everything works out, you're going to have re-registration fees, and you're going to need either a lawyer or a title insurance company to re-register the title, the mortgage on title of the house, and distribute all the funds. So some lenders will cover the costs of this as well. Some lenders will have a promotion like a cashback that'll cover this as well. So that's an important thing that we look into doing a refinance, because maybe two lenders have the same rate, but one's going to cover all the costs and the other won't. Well, let's go with the one that's going to cover the costs. Sometimes these can be, let's say, between $1,000 to $3,000, I would say.
Wow. Yeah, that's huge. I know that, like, speaking from what my own father did, he actually just went with the bank that he always has used his mortgage with and paid like an insane amount of transaction costs. But yeah, that's something I didn't even know, that like some lenders would like roll that into your mortgage and like essentially, cover that for you. So that's another huge benefit of like using a mortgage broker. It honestly seems like it's like a no brainer to like essentially get options, right? Like don't just go with your one single bank, like work with a mortgage broker and find out more options, because you have options as a Canadian. I think that's something that we often forget about, is that these banks like need to compete for our business.
For sure. I completely agree.
So, last question for you.
Yeah.
Who would you recommend considers doing a mortgage refinance?
I think you need to have a purpose to do a refinance first, and it really depends what the purpose is. So I would say 9 times out of 10, if you're doing a debt consolidation, it almost always makes sense. Unless unless you have a $6,000 penalty to take out $10,000 of equity, maybe that scenario doesn't make sense. But a lot of the times we're seeing people that have maybe $40,000, $50,000 of credit card debt that they want to roll in. Maybe they have a vehicle that has, a $30,000 balance, but $1,000 a month payment that we can convert into $100 a month payment, things like that. So the biggest things for refinancing are, if you want to improve cash flow by consolidating debt, that's huge. If you want to consolidate high interest debt, that's another huge one. And renovations on your home, that would be another big one as well. Those would be the main reasons I would say someone should do a refinance.